All right, what's up, everybody? Welcome back to another episode of Inside Bitcoin Spaces with Jason and Andrew.
What's up, Bob?
Today is Friday, April 17th, 2026. Bitcoin block height 945,498. Bitcoin USD price up a little bit today, sitting at 78,197 US pieces of paper. Andrew, how you doing today?
Good, sir. Jason, yourself? Yeah.
Doing good. So we're pumping a little bit today, up to 78,000.
Yeah, we seem to be kind of creeping back a little bit, so that's encouraging. Although, I don't know if you can put a direct cause on it. Is there anything that you in your mind is oh, well, it's because of this or because of that? It seems pretty just vague right now.
I think it's a game, I don't know. I personally think the 4-year cycle is broken, because if it's not broken, then doesn't that mean we're going to be in a long bear market until 2029, the year after the halving?
Yeah, something like that. I kind of tend to think the same thing, that it's with now so many institutional players, and we'll probably touch on some things about that, it's just how do you, I don't know. It's got to break away from the derivative sort of influenced pricing mechanism. I think we're going to see a lot more of true pricing across all commodities, not just Bitcoin. But right now it's just I'm encouraged to see it, but if you follow the theories and the expectation, it should go way, way up. I mean, it shouldn't be in this range at all.
No.
But again, that's another set of analysis. So
not even close. So hold on. Yeah. So are you about to make a prediction of 2026?
No. not going to do that, man. I mean, I don't know. It's I just more going on gut, right? Just sense of things. I think in my mind, awareness, this whole Iran paying for cargo tax fee in Bitcoin. We'll probably touch on that. Is more about bringing awareness to more of the population. I think that those sorts of things are going to be what drives interest and price up, and just kind of fleeing to safety. So anyway,
just real world use, right? You get sanctions and things like that, and people actually use it. Now, I think about the price, and it's eventually going to go up crazy high. I think we're going to cross 400,000. That's what I expect. I know it sounds crazy now, but I remember, I wasn't in Bitcoin at this time, but I remember when I first got into Bitcoin, I went back and I started looking at the predictions and what people were saying. And usually people were predicting super low. So in 2016, it was $900 in January 2016. And it went up to 17,000, 19,000, whatever it was, close to 20,000. But if you looked in 2015 and early 2016, people were calling for 1,000, 3,000, and it blew all that away. So I think it was, what was it? Was it 17, 19,000?
Yeah, something like that. That was kind of before I was really following it much.
Yeah.
But it wasn't Jamie Dimon so that's Morgan, right? Who's Goldman Sachs? Who's the head of Goldman Sachs?
Jamie Dimon. Yeah, he's
Chase. JP Morgan. Chase. Oh, wait, I'm getting them all mixed
JP
up.
Morgan. Are they the same? I don't know. These dang banks.
Well, I heard it was. I think it was the guy that said Bitcoin is rat poison.
That was Warren Buffett.
Oh no,
Charlie Munger. Those two.
Yeah, you're right. But anyway, it's not Jamie Dimon. It was the other kind of major guy. I was listening to some podcasts and they had a clip from him, and the interviewer was like, "Oh, well, what do you think about Bitcoin?" And he's like, "Ah, no, it's just a Ponzi scheme. It's all going to go crazy." And it's like, but you're you're you have a product.
Yeah.
And it was like so starkly negative given what we've seen recently in terms of like ETF announcements. I mean, Schwab is getting in, Goldman Sachs is getting in, I mean, with their own branded products. And that means that they can have all their advisors like push them because they're the ones getting the commissions and stuff like that. It's like everything that happens like at that level is like just more entrenchment.
Mhm.
So when I heard those comments from him, I was like, man, that seems like overly negative, almost like it's almost like a fear reaction in my mind. It just came across that way. Like it's like I have to say negative things about this thing because now it's a real threat to the industry. That's me reading between the lines.
Yeah.
But that's kind of the sense I got from this interview. It's like, why are they so negative? It's like if it's not a threat to their business, and maybe this is against the backdrop of the Stable Act. I thought I saw that the banks kind of conceded with getting the stable coins with having yield for holdings. I haven't been following it to the letter lately, but I thought I saw something like that. So, it's weird. All these things are kind of looming and will influence what people's perceptions are. So you wanted to hit on a couple articles, a couple of stories that were flashing through the news. What do you got?
Yeah, so I could just touch on that real quick. So it could also be misdirection.
Yeah,
He likes it. Maybe he wants it. He thinks it's valuable, but he's not going to tell the public that, right? He's going to be bashing it in public, and he's going to be stacking it behind the scenes.
yeah,
For me, I'm kind of the opposite, which could be dumb. I find out about Bitcoin. I'm like, whoa, everyone, you need to know about this. It's the next best thing. It's amazing.
right.
Backed by energy, permissionless, decentralized. You must learn about this thing, But somebody that might be already established, they might say, well, I'm maybe a little more professional, maybe a little more mature, I don't know. But they hide their intentions. Where me, maybe I'm a little naive, a little younger and stupid.
Yeah, most of the times we find out about these big players' moves, when they file their quarterly reports, and those have to be publicized. So then we'll suddenly we find out, oh, well, they were acquiring for the last 3 months, in major chunks, because they have to acquire quietly, otherwise they're going to move the price faster than then it's costing them more to get an established position, right?
Yeah. So just on the news, we have all these things going on with these wars, U.S. and Iran, Israel and Lebanon, Russia and Ukraine. We got the 2-week ceasefire going on. How do you think that impacts the price, impacts Bitcoin self-custody? You brought up the fact of the real world use case where Iran requested Bitcoin payment to go through. So I just think it's funny that humans in government control the fiat money creation. We're all fighting over resources like oil. Oil is like a main resource. They impose sanctions on each other. They wage wars on each other. And here we are, we're talking about Bitcoin. Bitcoin fixes this with neutral money. The saying, Bitcoin fixes this. It's money backed by energy that no single nation can print, weaponize. So
right.
I think once we start getting7-custody in the minds of everybody and just the power that self-custody has, 78K, we're going way a lot higher than that.
Yeah, you hear in the news they throw around sanctions, we're going to impose more sanctions, lift sanctions. Whenever they say sanctions, what they really mean is US dollar SWIFT system controlled monetary flows, which is SWIFT is the old existing interbank system, and which countries and big entities have to use that to move dollars around. So, they just say that oh, sanctions so this is arbitrary thing that like the government can do to another government, mystically. And that's really not the case. It's like, no, it's a particular thing. It's like, no, it means you can't use your bank account with us, your big country bank account type things. And when you hear about things like, oh, well, this country and that country have a bilateral trade agreement and they're going to use their own currencies, it's like that completely sidesteps the sanctions control regime. So that they can't do anything about that, and the reason that's, and I think it's been, I know it was like some trade union representative in Iran mentioned this payment of the tolls of the tankers in Bitcoin, but I don't, it's hasn't been confirmed that it was really accurately reported. I mean, it went wildfire through the media, right? Everybody's like, Bitcoin, what are they talking about? Like paying for a toll in Bitcoin? That's crazy. And so it had I think, a positive effect in terms of raising awareness.
Oh yeah.
I don't know if it's real or not. I think Arthur Hayes said, like, yeah, I'll believe it when I see it on the blockchain kind of thing. It's like when I can like see I can point to a transaction that I know that the endpoints and the people transacting it are actually, an Iranian official and a cargo ship, operator, then I'll believe it. And I think he has a good point.
How would you know though? Because that's one of the benefits of Bitcoin. It's pseudo anonymous.
They would have to disclose it, right?
But why would they? Right?
Well, just to like prove a point, maybe.
Yeah, but that would be just to pump up Bitcoin. They don't necessarily care about the price of Bitcoin. They care about its usefulness.
Well, right. This is, I think, if you were to kind of try to get in the Iranian regime's mindset and say, okay, we're in a position where we want to extract a toll, whether they can do it or not, I think it's another story, but say they are, and say, all right, we're going to extract a toll. But wait a second, if we charge in dollars, US dollars, then the US can just print more dollars and make our dollars less useful. And maybe if we charge in gold, well, that's kind of cumbersome. What are you going to do? Send a boat out to the tanker and say, all right, give us some bars of gold and then you're good to go, or, and then we have to like put it in a vault somewhere. And, so it's not like it can't be done. It just is like, okay, well, then you get into things like gold representations, like gold contracts and stuff like that. So you don't have to like move the actual metal around, but then now you're introducing a counterparty, and it's like, what is there? Well, there's Bitcoin, right? And it like gets around, it was designed to get around all these issues, which is like no other state, government, whatever, can control its issuance. Its issuance is controlled by the ledger and the consensus mechanism and the program that it's written in. And you don't need any other intermediate actors to like transact it, right? It's like point to point, bearer instrument, all the things we like to say. So I think when someone that's kind of unknowing about what Bitcoin is hears like, wait a second, people in Iran are charging Bitcoin for a toll fee for a tanker. Why would they do that? I mean, think about somebody just aware of it. Doesn't that kind of like make you go, why? I wonder why Bitcoin is different. Why would they even think of to do that? So that's, I think, the biggest upside of what happened there. But yeah, we'll see. And Trump's kind of like, look, it's international waters. Nobody should be charging any sort of toll. There's no toll to be charged. So, and then this gets backed up by the strength of the blockade of the Navy in the region, and whether or not anything is left for the Iranians to like lob at a cargo ship that's like violating their, whatever their rule is. So yeah, it's kind of a messy situation. I think I heard that they might extend the ceasefire to kind of so they could have more time to work out negotiation. I don't know. I kind of would prefer this thing not to like, get dragged out on and on and on. We know how that tends to go. But if it means a little bit of an extension to get to a solid, lasting peace deal, that'd be great. I mean, I think at the end of the day, if the chaos and the terroristic threat sort of scenario gets reduced immensely or eliminated, we're talking a whole new world, right? And this, I think, then allows for more accurate price discovery. It's like, well, what really, if part of what it costs to like have oil come out of the Middle East was the fact that somebody was like extorting, these tanker ships, and then City of London and what's the insurance company, Lloyd's, has to write a policy just in case some terroristic act happens. So it costs more money to like pay for the premiums for that policy. That's all gets rolled into the price, right? So the more chaos, the more threat of a terror, and like, well, we got to make assurances that you don't lose our shirt on somebody bombing a tanker. Is like, if that's all removed, then it's like, well, then the price of oil can come down. So we'll see where it goes. But it's very interesting. Yeah.
I think trust is breaking down here in the world.
Yeah.
We have to trust people, and people are breaking that trust. You have to trust the U.S. government, Treasury, Federal Reserve, not to create endless amounts of dollars. Well, they're breaking that trust. You got to trust whoever physically holds your gold to bring it back to you and not create fake gold. Or whoever is even transacting with you to put some sort of filler in the middle of that. When you get a gold or silver bar, it's got to get drilled through the middle. They got to make sure it's solid.
Yeah.
And then you have all these derivatives that are being created off of these resources. So you have to trust all that. Bitcoin removes that trust. So that's an amazing invention.
Yeah, even trust in other things, right? Like, Trump got in there and said to all the NATO countries, like, hey, you guys going to help out? We're part of this NATO alliance. You're helping out, right? And they all went, we're going to like pass on helping out. In fact, we're not going to let you use some of our forward bases. We saw that with the UK and I think somebody else. But it's like, okay, now that we've gone in and you guys didn't help out, tell us again, why are we in NATO? I think he's setting up the story for maybe a bit of a NATO exit of the U.S. We'll see what happens.
Everyone's going to turn to Bitcoin once they realize that they don't have to trust. They can just verify. It's very easy. And as time goes on, it'll be easier and easier. People will understand it more. It's a wild, mind-bending concept, Bitcoin. But when you really think about it, it's awesome.
That's right.
All right, so let's talk about Spaces Protocol. So Bitcoin Conference 2026. You're going to be doing a workshop.
That's right. Going to do it on the last day. So it's Monday, Tuesday, Wednesday conference in Vegas at the last week of the month. Let me just quick show my screen here. Are you seeing it?
Yep, there it is. Looking good, looking great. This new setup's looking nice.
All righty. So, we're using a bit of a different video sharing thing today. So, it's I'm really looking forward to this, and was kind of a lot of what I'm running is off my laptop. So I was trying to figure out how to make sure that it works properly when I get there and for the conference. But I'm going to be holding it's an hour-long workshop at noon local time on the last day. We're going to be giving away sub-names in the Bitcoin 2026 space. So if you're interested to come out, we'd love to have you participate if you're going to be there. And I'm going to be like talking the shit up about this, in the days leading up. And even for people that can't, if you can't make it, and you really want a name, we can find a way to get you a name. But there's going to be other opportunities, I think, as we move forward. The Space Protocol went mainnet, sort of a beta launch about a week and a half ago.
Yep.
So this first little period, we want to just make sure everything's tight, I's are dotted, T's are crossed, etc. But yeah, it's all looking good. I've got things rolling and working quite well on my end, so I'm pretty happy with it. And we'll see kind of where we goes. But I think we're going to be launching into a new mode here of really trying to evangelize and get the word out about Spaces protocol and the benefits. And there's a lot that needs to be built, kind of more supportive ecosystem sort of realm, right? So yeah, I've got a bunch of things that I've kind of started working on, but again, it's hard when it's not live, when it's not like real, when it's still on testnet. It's hard to like get a lot of that kind of worked out. Now that we're here, we can really see where it goes. So yeah, excited.
Yeah, Spaces protocol really ties into what we were just talking about trust and trust in a society where trust is breaking down. People are looking for ways to minimize and reduce their trust, to minimize and reduce their risk. So, of course, we're going to start with money. I mean, that's amazing. That's one of the most important, if not the most important things amongst communication between humans is money. But after money, we have naming, identity. And Spaces protocol can really fill that gap with a permissionless identity system. And I say that to people, and sometimes people are like, I don't want to tie my identity to Bitcoin. I want it to be pseudo anonymous here. And I understand that. That makes sense. And that's your choice. You can create millions of subs, create these subspaces, and you could be one and done. You could use it and never use it again, just like a Bitcoin address. You could have some that you just toss away after one use, millions of them. And you could have some that you use maybe for your medical records, your professional businesses. Let's say you have a business, you use it for that. Contacts, family things. There's so many reasons why you would want to own your own personal identity. And I also think with this, people are going to start to figure out the power of Spaces when the governments or whoever else, the central figures, come out and they introduce the digital IDs. There's a lot of talk about that, and maybe we can get into that in a further show. But there's a lot of talk about these centralized digital IDs. And there's a lot of pushback too. People don't want digital IDs.
Yeah, it's it's kind of scary. And there's a group that I'm involved with that is focused on, how do we as developers really kind of push the tooling and the ecosystem around decentralized IDs as an alternative to what the government is kind of pushing our way. And it's kind of a race, I think.
It is.
What I fear the most is that when the government comes to like impose the usage of an ID scheme that they control, that they issue, that they can revoke, then all the services that they attach to it, whether it's Social Security, whether it's taxes, whether it's getting paid by you can imagine they say, well, if you've got a business license in the United States, then you have to pay payroll through this system.
Mm-hmm.
And most people are going to be like, well, I got to get paid, got to pay the rent, so
they're going to do it.
Having an alternative, and then a set of not only just an alternative that people pick up and start using and kind of taking their own identity into their own control, and enough of an service ecosystem that then uses that feeds into that, then we have some alternatives. So it's got to be more than just the local farmers market, right?
Yeah.
It's got to be like bars and restaurants and grocery stores and hardware things where you're buying and selling stuff in your community. But it still feels like we're quite a ways up, and governments can always be working on something in the background and not really say much about it, and then spring it on us when there's a crisis that emerges. So we'll keep working, fighting the good fight, and we'll see where we can get with it.
That's right. All right, let's talk about quantum now. So have you heard of this? We got BIP 361. It's a proposal to freeze public keys exposed or public key exposed Bitcoin addresses to prevent quantum attacks. So I haven't read too much details on this, but the gist that I wrote down, the gist that I summarized here is they want to freeze every Bitcoin that doesn't migrate to some sort of quantum safe address within a certain time period, 5 years or whatever it is. And I think this might have came from Jameson Lopp and some other developers to freeze these quantum vulnerable wallets. Have you read much about this? And what is actually a quantum vulnerable Bitcoin wallet?
So there are, as I understand it, the first style of address, which when they talk about Satoshi's keys, most of these addresses that were used early on are kind of part of what's vulnerable. And then the most recent things, the Taproot, which actually Spaces relies on, actually uses a form of addressing that is not the most the most secure in this respect. But in my opinion, this just feels like a bunch of FUD. I think any proposal that says there is any opportunity to effectively make somebody's savings spendable, basically you've taken it away from them.
Right. Right.
And maybe I was just an early Bitcoin adopter and I set up a trust to with these wallets early on, and I've passed on, and my estate has got in the provisions of my trust that none of my heirs can get to it until 50 years past my death. It's like, that seems like a completely reasonable thing that somebody might do, and yet a proposal like this one would effectively ruin that scenario. So I think if you start even in little ways removing people's ability to spend, it's a breach of the kind of the trust of what Bitcoin was all about. And I think
it is.
If you start chipping away at that trust mechanism, then it's going to just be a series of cascading sort of chipping away and effectiveness. And that's like 1,000 paper cut thing, death scenario. So my hope is that a lot of these quantum FUD just kind of fades away. That, I mean, it's good that there are people really working on what are some things, but I think it would have to be optional. Like, it's like,
Yes.
look, it's like, and if you think that the quantum threat is just is a bunch of crap that will never come true or won't come true in your lifetime or your estate's lifetime or whatever it is, and you just choose to keep your coins parked the way they are, then that should be your option. You shouldn't be forced to have to do something about it. That's not the way Bitcoin was built from the ground up. So
so yes, it has to be optional. That's number one. It must be optional. You know what this reminds me of? Y2K. You remember Y2K?
Oh yeah, I was there.
when the digital clocks were going to turn from 1999 to 2000, and it was going to be this crazy, everything's going to break, the world's going to end. And what happened?
Out of the sky. Yeah.
And what happened?
Like a whole lot of not much.
Nothing happened.
Yeah.
So quantum could be, this quantum threat, it could just be another Y2K, a whole lot of nothing.
Yeah. No, I do clearly remember it. I mean, what it did do was it forced a lot of companies to upgrade their hardware and spend a bunch of money changing their software. And that actually caused a big, in the early 2001, 2002, there was all the budget for IT was just exhausted. Like nobody could buy anything because there was no money in companies to do it.
Mm-hmm.
So we kind of like suffered a bit of a mini drought after that, just because everybody had been so freaked out about Y2K. And maybe that some of that IT spend was required or was prudent, because if it ain't broke, don't fix it, right? People just like keep going on and on forever. But we lived through that. We lived through other things. I mean, there's another Unix time bug that's like, Unix time is stored in like a 32-bit unsigned integer or something like that. So there's some future date where that will roll over. So, what are we going to do? It's the same thing. It's like another version of the Y2K bug.
Yeah.
It's like, well, what happens if things stop working when that happens? So, we'll see. We'll see what happens. But, I think quantum is like, has a way of, because people don't grasp what it means,
right?
Really understand what it takes to like put together a machine to do these kind of cracking. They just take at face value that it's a threat that's assured going to come. And I don't think so, but
yeah,
could be wrong.
Me personally, I don't fully understand quantum and what it is, but I understand the ethos of Bitcoin, and you can't go around freezing people's funds and wallets. What would happen if quantum did break these specific wallets, but everyone else that's aware or whatever just moves theirs to these different wallets? So what? Quantum people with quantum hack Bitcoin. So there's a few million Bitcoin on the market. Okay. Is that I guess, I mean, that would.
I've heard it theorized that, if that really did play out that way, it's effectively just redistributing some portion of a fixed quantity, asset class.
Yeah.
So it wouldn't be like completely 100% destructive. It would, change the market dynamic for a while, but at some point, all that value would get redistributed, and priced at, whatever the market rate is over some period of time, and we would just keep chugging. So it's like even the worst or really bad scenarios aren't completely the worst possible thing.
Yeah, it would definitely crush the market, but then I'm thinking like devil's advocate here, it would also crush the reputation of Bitcoin. Like, hey, it's been hacked. So quantum breaks it. Who's to say what will be broken again in the future? It will definitely reduce people's confidence in Bitcoin's longevity.
Right, exactly. Again, we've seen this. We saw this through the block wars, right? We've seen things like, who was that guy? I can't remember his name, that was claiming he was Satoshi.
Craig Wright.
Craig Wright, right. Everybody was worried. It's like, well, if he really is, then he becomes a target, an individual voice that can be swayed and influenced, and went through all this legal proceeding to try to establish that he was. And at the end, it was determined that he wasn't. And he could never prove it, by signing any of the keys that proving that he had keys to all the original coins. So it's like, that's kind of came and went. So, and there'll probably be other things, that come and go. I mean, we saw things like the Mt. Gox hack, was really disruptive, and people thought, oh, that's it. It can't work. And we've lived through all that, and there'll be probably other things. But if you're going to bank on or place a bet on some type of system, which one are you going to place a bet on? The one that you think is the most, cryptographically sound and bound by energy and hashing and all this. Everything else has a downside, to some extent.
Imagine
Bitcoin has downsides too.
It does.
It's slow, but those things are being addressed in other ways. So
imagine Satoshi, the genius that he was. He goes through all this effort to pull all these technologies together to create Bitcoin. He goes through all this effort to remain anonymous. He doesn't go to the government to say, you must change the money. He doesn't go to the government and the courts and say, I declare you must change this money. But all of a sudden he comes out and goes to the courts to say, hey, I am Satoshi, right?
Yeah.
Satoshi would never reveal himself in that manner, knowing all the things that he did and the way he went about things. Satoshi would come out, he would make some sort of message through Bitcoin. Obviously, he would spend something, he would sign something, he would put a message in the blockchain, something like that. He wouldn't go to some trusted authority court judge to say, everyone must believe me, I am Satoshi.
Yeah. There was a recent TV thing that was put together, supposedly tying Adam back to Satoshi's identity, and they had gotten him on it for an interview, a follow-up interview. It was like, we're going to ask you point blank, are you Satoshi? It's like, no. It's like, even if Satoshi called into this show, do you think they would say, well, I'm Satoshi?
Yeah, it's me.
Like,
it's me.
It's like, it's pretty amazing that whoever Satoshi, he, she, they have been able to maintain this complete, anonymity this long. And, I wonder one day if we'll get kind of like an obituary, sort of like somebody died, and, now that they've died, that the disclosure that they were part of the Satoshi team or they were Satoshi or something is revealed, such that the news of it doesn't change anything,
right,
but kind of like closes the loop on and would probably be beneficial. Just like, well, that's not something where extra doubt can be sown going forward.
Right. Yeah, it's possible.
A lot happens on deathbed confessionals. Right?
Yeah. Wasn't there somebody that one of the astronauts came out and said we didn't go to the moon or something on his deathbed?
Yeah, there was something about that as well. It's like, and now you're like, well, did that recent moon flight actually happen?
Yep, it's crazy.
So yeah,
all right.
It's not the Jason and Andrew conspiracy show.
All right, let's talk about the Tether wallet. Want to talk about maybe some things you're doing with the Tether wallet?
So the Tether wallet, they just announced it this week. It doesn't have anything particularly to do with spaces, but I kind of took interest in it. I've actually been working on a spaces capable wallet. And what does that mean? A wallet that understands the transactions of spaces protocol and can be used to like take action. So Jason, like right now, when you want to do something with spaces, where do you go?
Yeah, me personally, I could use Akron Wallet. I could use the command line interface. And I downloaded your wallet too. So, I got some options.
Yeah. So I'll bring this up. So this is just their wallet site. So yeah, it's kind of, when you think about what spaces is, it's really a set of like uniquely crafted transactions that sit on the blockchain, and then some supporting software around that. So having clients, having applications that understand what those are, how to look for them, and also how to create new ones really becomes a key thing when we get to like the final stage of when you take a subspace, or we call it a handle, and normally that is kind of issued and managed through an operator, which is the person that owns the top level space and that it sits under. And once a special transaction is created that is associated with that subspace, then the operator no longer has any control over that. And but now you, as the user of that, have to kind of take responsibility for further updates. If you want to change some data that's associated with it, then you need a mechanism to do so. Most people don't have the software like that's running the nodes in the indexer and other things like available to them. So I thought about it more and more. I wanted to make some sort of device or process that makes it easier. Again, this is kind of the further ecosystem build out that we kind of are looking to participate in going forward now that things are launched mainnet wise. And because you need additional funds to basically execute a transaction, like every transaction on the Bitcoin blockchain requires a fee. Like you can't just put one out there and not spend any money, which means you have to have money available to make those transactions. And if you just are given a subspace handle, that's great, but that people aren't giving you money along with it for future transactions. So we need a way to make that easier. And I looked at a lot of different wallet sort of SDKs, and I kind of liked what Tether was doing with their SDK. It's kind of been in an alpha beta mode for a while, and I started building the Spaces wallet with that. And this allows me to do things like, within the wallet, search for a subspace. Is it available for purchase? What's it going to cost? How do you pay for it? If you're already in a wallet, it makes that whole transaction a lot easier. But and I'm aware that the same wallet SDK mechanism is used in the Rumble wallet. So if you follow Rumble, you've probably seen that they've been pushing their Rumble wallet, and they've been touting it as like a way to like contribute to the different Rumble content creators directly without going through any bank or third-party mechanism. Obviously, all the attributes of being directly on chain. The thing that I think that's interesting, for one, Tether's a huge company. They are a big player in the space, and they're very respected. Yes, they kind of spearhead their own stablecoin ecosystem with the USDT and Tether, and that's a huge part of their business. But they're into a lot of things, including tokenized gold holdings, and they're very much a Bitcoin company at the core. Their founder was very friendly to Bitcoin, and I think continues to be. So when they came out with their own wallet, it comes with a big marketing push and budget, right? And one of the things I think are interesting is that the wallet is designed to transact from the get-go in USDT and then USAT. Now, USAT is a more it's a variant of USDT, but it was designed from the get-go with U.S. regulatory, framework in mind. I don't know if you followed. There was a guy named Bo Hines that was part of Trump's original digital commission to like explore these things. He left the government, went to work for Tether, and spearheaded this thing. And then another thing which is really interesting is XAUT, which is their tokenized gold holdings. And when we talk about sound money and Bitcoin and fiat money and sound money and like, why is it different? How is it different? I mean, you can't not talk about gold and silver and platinum and palladium and other types of commodity money. I mean, historically, gold and silver has been what people understood as money to be forever, right? Going back to the Romans, like before the Romans, right? And I think it was the Byzantine Empire was the longest running use of a money without inflation. I think they went something like 500 years.
Impressive.
Without debasing their currency at all. Can you imagine like how many lifetimes that is? It's like, and your money is whatever that coin was, you can go find them. But that coin and the pricing around it, like all the things that you like interact with and buy, it's like you would know exactly what to expect. It's like you'd say, yeah, it's a loaf of bread. Oh, that's a good deal, or that's expensive. I'm not going to buy it, because you would know inherently how much everything costs.
You know what they probably did though? It was like a tight community. I'm not really sure on the history, but just imagining in my mind, it was a tight community, right? No internet, travel was a lot harder. So if it was gold coins and things like that, they probably just killed people, took their stash, and it just redistributed. That allowed them to not have to create more units of the currency. They would just kill people and steal their stash.
Yeah. you know, I think I think the government like was able to exercise the discipline of not debasing for quite a while. It's just, but governments as they go, it's just too tempting. It's
It
just
is.
too tempting to like debase. I mean, the Romans did it. They started shaving coins. The fact that the coins have those like ridges on the edge is so that if you ever like take a chunk off of it and save it, well, that the next person will see it. Obviously, it's like, hey, wait a second, there's no ridges on the edge of this coin. So, but then they can do all sorts of things like, you know, melt it down and add other less valuable metals to it and restamp it. So, and that's what the Romans did over and over again. So it's no stranger to history. Now, but the reason I'm interested in this is like, for one, it's a big company. They have big budget. And when you give somebody a tool that has these three things, I don't know if I can show this. I had it on the LinkedIn, but can you hear this?
Yep. Well, so how does Tether make money doing this? You know, it says it showed a picture of the 12 words, but it also said something like no words to remember, just your email address. So how does that
Yeah.
work?
So yeah, I mean, they have a backing up the seed to some cloud. I haven't gone through to see what the cloud backup is. I kept hitting skip because I didn't want it to like back up my seed phrase to some Google Cloud account, right?
Right?
Uh, but eventually, it gets to where you can actually, you know, generate the 12-word seed phrase, mnemonic seed phrase, and you probably noticed there that that they mentioned that you can sign up, you know, create a registration. Of course, now you're KYCing yourself to an extent, you know, because you're identifying yourself, and create a Tether wallet address. So something, I don't know if you can see this. Can you see it says send to
Yeah.
at tether.me?
Yeah.
So so they've created their own little you know, namespace to transact in these different currencies and these different across these different chains. I think one thing to take away from this one, I mean, it's obviously they spent some money on that little promo. I mean, and you know, getting the word out to a mass audience is, you know, is difficult, and you spend a lot of money to advertise and get, you know, an idea for a product across. So the fact that they're putting real money behind it, I think, is interesting. Obviously, the use case here that they're really highlighting in this little video is one of remittances, right? Where you're sending money between countries is a big part of it. The kind of all the scenarios they played out kind of lead to like, oh, this is just, you don't have to go down to Western Union and like, you know, put in your money order and like, you know, pay whatever it is for that, and then somebody on the other end of the world has to go down to their Western Union office and risk getting like, you know, mugged, and you know, they take something crazy. It's like 15% like in fees. So it's like, you know, the cross chain cross border remittances is a big use case,
Mm.
especially for stable coins and the other non-Bitcoin stuff. But I think what also is very interesting, and they touch on it in that video, right, where the elder Indian fellow man is giving his daughter or granddaughter or somebody gold. And,
Mm-hmm.
culturally in India, gold as a wedding gift is a big thing. I mean, as a culture, they are very steeped in using gold and precious metals, not only as jewelry, but also as money and major and a major way to save, right, as well. So we don't really in the U.S. and Western country, we don't really think about it that much. It's like, you get married, you do your wedding registry at Bed Bath and Beyond. You don't like
Yes,
expect people to be
yes.
like rolling up and giving you like gold bars or something.
Right.
Uh, so, but again, talking about whenever you start the discussion, you talk about sound money. I mean, the use of gold as money comes into the discussion, and this is kind of another way. And you've been able to like transact in gold-backed representations of currencies for some time. This is not new. There's been other gold, blockchains and other ways to do that. But again, it's like kind of like you're beholden to the counterparty, right?
Mm-hmm.
So, you know, whatever these other schemes were, like who's going to audit it? How's it going to be tracked? How do you know that it's like Fort Knox. How do you know that there's gold in there? I mean, nobody's like looked lately. So again, it's like still you kind of a trust me, bro, that Tether actually has it. But with them being such a large player, it's like they can't really afford to like, be screwing people over. So uh, it's another sort of the mainstream sort of financial players becoming more and more entrenched into these types of products. And once you have a wallet where you can see easily gold, and say you have a little gold in there, some Bitcoin and some like USDT, it's going to be very obvious like how these things are changing in relation to each other because you're looking at them all in the same place,
Mm-hmm.
which in my mind is the biggest advantage.
Yeah.
that that this is going to help people get in their mind how these things relate and why fiat behaves the way it does, or at least hopefully gets them a little more curious around that. And of course, like in this case, they have their tether.me sort of name so that I can send, if I know your name, you can send it. If you know my name, you can send it. Well, Spaces gives you the exact same ability, but instead of Tether managing that identity, that name, you can create it for yourself with Spaces. So
Mm-hmm.
it adds a layer of self-sovereignty to how the names are used. So, and we'll probably talk about this more in the future. Going,
I think it's a little confusing though. It kind of blurs the lines of definitions when the
yeah,
guy was like, "Here's some gold." He sent him some gold. He sent his daughter some gold for the marriage. Well,
right,
actually, that's not gold. XUAT or whatever it is, that's not gold. That's like me you saying, "Hey, Jason, I want to go play some football or baseball. I need some cleats." I'm like, "All right, let me send you this digital pair of cleats." Right? That doesn't help you in the physical world. Gold's a physical asset, so
yeah,
it's an extrapolation. It's confusing. We're I guess as we go down this digital path, we're going to start accepting these digital receipts for these physical items. But it's confusing to me. It's strange.
yeah. I'm You and I, we're pretty much convinced about the proposition of the value proposition of Bitcoin and
Yeah.
how it differs from all these other things. But you got to put yourself in the mind of the uninitiated people that just. I mean, I went most of my life not really even thinking about what money was.
Me too. Me
Most
too.
people still haven't.
Yep.
And most people, unfortunately, probably won't start thinking about what money is and what does it really mean
Mm-hmm.
until it's shoved down their throat that something's changing and that that a new ways of money and how they're going to be used is going to be like probably shoved down their throat by their national government. And we all kind of expect that something like that is going to happen in different ways around the world. So that's when most people are going to be like, what's going on here? So I think, educating yourself. And I think these things, while it's a small step, it helps to kind of get people thinking differently. And if that's the only good that comes out of something like this, then I think it's still good in my book.
Yeah, I can see that. I can see the benefit with it, but also I can see this, where this is kind of like the gateway, the Trojan horse to central bank digital currencies, the CBDCs. Tether is the CBDC. Now, it might not be a bank. It might turn into a bank. It might be a bank. I don't know. It might just be a company. But this is kind of where it seems like it's going. The good thing is that they're allowing Bitcoin to have Bitcoin on-chain and Lightning. But I kind of see that little slippery slope where, it's Tether is the CBDC. The good news, though, I can see with that is everyone's going to want control of the money. The central banks want to keep it. The private companies, Tether wants to have it. The governments, the Treasury, Trump, they want to have it. Tech companies, they want to create it. So we have these huge pillars, these huge structures with tons of power. They're going to be fighting over the right to create money. And hopefully that allows people to see the value of Bitcoin. And even those people in those companies, like, you know what? Yes, I wanted to control money, but maybe we just use Bitcoin.
Well, and maybe if all those other sort of mechanisms are fighting for, I guess, dominance, for lack of a better word.
That's a good one. That's a good word.
Maybe Bitcoin just kind of keeps everybody in check, doesn't allow to the extent of abuse that untethered, lack of a better word, untethered fiat monies just do. Even if the US dollar never has any serious backing of gold or promise of land or Bitcoin or anything, the fact that there's an alternative will keep the national currencies, in my mind, in check. Unless there's some laws okay, Bitcoin is banned. Now you can't use it in your country. Well, they can say that, but you can move countries. Or you can just, at some point, what they call, monetary controls, get erected when governments get scared about, value leaving their country. And, throughout history, there's always ways to kind of get around it. Even people they'll just leave it behind and go live and work and be somewhere else. That happens a lot too, and has over history.
Yep. All right, let's touch on this last topic for the day. We're going to touch on Goldman Sachs filed for a spot Bitcoin ETF. The title of this ETF is named Goldman Sachs Bitcoin Premium Income ETF. Now, the funny thing about this one, and maybe it's not different than others, but it does not hold Bitcoin directly. It buys existing spot ETFs, crazy, paper on paper, like BlackRock's IBIT or IBIT, and sells options for them for premiums, or options on them for premiums. So to me, man, this is just so weird how we have this amazing permissionless technology like Bitcoin, and then we have all these companies creating paper-backed derivatives or digital-backed derivatives on Bitcoin. And now Goldman Sachs has to file for permission on a permissionless technology like Bitcoin. So, and then even deeper, this is a derivative on top of a derivative. But I guess we still live in this world, I pay my bills with dollars. I'm sure you pay your bills with dollars. So many people are still chasing dollars. And I guess it's just going to take a long time to get out of this system that we're all tangled up into.
Yeah, again, we talk a lot about, changing your thinking around these things. And that's really where you have to go in terms of understanding the core value. But for so many people, and there's probably people that are living today that'll go to their grave never having really challenged that, they just see Bitcoin as, oh, here's something that's doing better or doing different than other things,
Mm-hmm.
like in the market, other options. I can buy bonds, I can buy treasuries, I can buy stocks and securities, I can buy gold, I can buy, whatever. And oh, here's this new darling thing, in the market. It's a Bitcoin ETF. I don't care about Bitcoin, but I like to see where the price, I like that where that price is going. And I've heard this kind of referred to as like boomer candy. Somebody was mentioning that they were using that term, and what they were meaning is like, it's like if you're like a baby boomer retiring and you've got a nest egg of cash, it's like, what do you care about? You care about parking that cash somewhere that's going to give you an income return that you can use to live off of or partially live off of or supplement, Social Security or whatever.
Yep.
So you're looking for things that like will give you like, a regular, just put the money there and it'll like give you spin off a certain amount of income. And a lot of those sort of things just kind of suck these days, but Bitcoin's kind of shines a little bit more. And if you study what Strategy has done, they've created a whole portfolio of different kind of products that give you different kind of amounts of this risk for income. I think their stretch one is also, giving out income. So it kind of falls into that same thing. It's like, it's going to be a way for people who don't choose to understand it to like try to, feel like they're in on it and benefiting from it. But again, like you mentioned, it's really a derivative on a derivative on a derivative, and you're like basically paying out based on the expectation of appreciation of the underlying Bitcoin somewhere else. And to me, that's just way too many intermediaries between me and what's going on. And it has potential to kind of go bad, or it will inevitably probably dampen in some of the price volatility of Bitcoin. We're in a world now where these things are without a doubt influencing, the pricing of Bitcoin. And you can't have it both ways. I think you can't have the legitimacy of the financial market without having the dampening effect of all these things that get built out there. So
right, because that's how the current market structure is.
Yeah.
We all make cash flow off of existing wealth. We give our existing wealth out to people. So you got $1 million, you give it to somebody, they make interest on it. Whatever they do, they lend it out another way.
Or
then they give you a piece of that. So they give you this income from it. And I could see the attraction, You want to live, you need the cash to live right now. So have you looked into this? Is there anything interesting as far as income producing ETFs or any of these stock Wall Street products?
Not. I mean, I can see the interest for someone who's, got a broad portfolio that is looking at it from kind of an existing mindset, probably later in their investment years, or maybe they're managing some estate or something like that for a family office, where it's up to them to kind of make sure that, it's doing as good as it can out there, whatever that nest egg is. But the more you study about like counterparty risk and, how much the fees take out of what you potentially could have been making, because all these players, they all take their own little cut along the supply chain of these things. And effectively it's like, well, I'm effectively not getting the yield I could have gotten just because I'm buying it in the system, like all of that stuff kind of turns me off. So I choose to kind of stay away from it.
Yeah, I've been the same way, but they're teasing me with it. You get this steady income, this passive income, very attractive.
Yeah, well,
there's a lot of risk.
Some of us just keep after working for our money. Right?
We gotta work. All right, well, that was a good show, Andrew. Anything else you want to discuss?
Nope. Just again, I'm looking forward to coming out to the Bitcoin conference at in Vegas at the end of the month. If any of you are out there and see this, come look me up, come, shake my hand, and I would love to chat and find out what's going on with you.
Nice. All right. Thanks for your time, Andrew. Thanks for watching, everybody.
All right. Take care, everyone. Bye-bye.